Top 10 Compliance Findings, featuring Training Officer Effie Barnett.
Hello, everyone, and welcome to Top 10 Compliance Findings. I am Effie Barnett, a Training Officer with Federal Student Aid. In this presentation, we will review the top 10 compliance audit and program review findings by number of occurrences from final audit determinations and final program review determinations issued in the 2019 fiscal year. That is the government fiscal year, which ran from October 1st, 2018 through September 30th, 2019. We will look at each finding in detail and specifically cover its most common causes and solutions to remedy and prevent the deficiency. This presentation includes contact information and 2 sections of resources that will help you stay in compliance. You should view audits and program reviews as meaningful processes that validate the overall quality of the administration of the Title IV programs. They identify your school's strengths as well as your weaknesses. Use them as an opportunity to evaluate your needs to maintain administrative capability and strengthen your internal controls. Administrative capability and internal controls are related. Schools are required to demonstrate that they are capable of administering the Title IV programs. The standards of administrative capability are summarized in 16 paragraphs in the regulations under Section 668.16. And here are a few highlights. To demonstrate administrative capability, a school must administer the Title IV programs in accordance with all applicable laws and regulations. It must designate a capable individual to be responsible for the administration of Title IV programs. The school must use an adequate number of qualified persons to administer the programs and communicate information received by any office at the school if it relates to a student's Title IV eligibility. And the school must have written procedures or written information about each office's Title IV responsibilities. And finally, a school must have a system of internal controls. And internal controls are the processes that help an entity achieve its objectives. And a school can strengthen its internal controls of its Title IV administration by having an adequate number of qualified staff, establishing ongoing training to develop and retain competent staff, communicate across offices to facilitate the delivery of the Title IV programs, and when necessary, their return. A school should be creating and maintaining detailed policies and procedures and monitoring processes through reconciliation and monitoring performance through internal reviews. Everyone at your school is responsible for internal controls. There is an excellent introduction to internal controls, and it is in our Federal Student Aid Handbook. It's Volume 4, Appendix B, and it's called A School's Financial Management Systems. So we're going to first take a look at the top 10 compliance audit findings. A Title IV institution generally must have an independent auditor conduct an annual compliance audit. The compliance audit report is uploaded to Easy Audit, and it is reviewed by the Easy Audit team, and they determine if the report is complete or incomplete. Complete audit reports are then classified as deficient or non-deficient. Deficient audit reports are forwarded to the school participation divisions for resolution. An audit is deficient if it has questioned costs of $10,000 or more, significant findings with an error rate of 10% or higher, minor findings with an error rate of 20% or higher, or repeat findings. So here are the top 10 compliance audit findings from all final audit determinations issued in fiscal year 2019. Student status, inaccurate and untimely reporting. Repeat findings, failure to take corrective action. Return of Title IV calculation errors. return of Title IV funds made late or not made, verification violations, qualified auditor's opinion cited in the audit, student credit balance deficiencies, entrance and exit loan counseling deficiencies, G5 expenditures untimely or incorrectly reported, and Pell Grants, overpayments, and underpayments. Here are the top 10 program review findings from all final program review determinations issued in fiscal year 2019. Student status, incorrect, untimely reporting, return of Title IV calculation errors, entrance and exit loan counseling deficiencies, verification violations, consumer information requirements not met, satisfactory academic progress policy not adequately developed or monitored, student credit balance deficiencies, lack of administrative capability, account records inadequate or not reconciled, and finally, crime awareness requirements not met. The compliance, audit, and program review top 10 lists share these 5 findings. Student status, inaccurate and untimely reporting, return of Title IV calculation errors, verification violations, student credit balance deficiencies, and entrance and exit loan counseling deficiencies. We begin the detailed review with the top 10 compliance audit findings, which include the 5 shared findings that we just saw from the previous slide. I reviewed deficient compliance audits whose final determinations were issued in fiscal year 2019 to determine the current causes of each finding. So here we go. Number 1, student status, inaccurate and untimely reporting. As you saw, this is the number 1 finding for both compliance audit and program review. The causes associated with this finding are inaccurate reporting of enrollment status and effective dates, which include the statuses and dates reported to NSLDS do not match the school's records. Incorrect last day of attendance is being used when a student fails to return from a leave of absence. Or the school fails to update the enrollment status when a student returns from a leave of absence or when a previously withdrawn student re-enrolls at your school. The end of term withdrawal date is being used for unofficial withdrawals instead of the midpoint. And graduated students are being reported as withdrawn instead of graduated. We see schools are failing to report the last date of attendance and changes for graduated and withdrawn students. An inaccurate reporting of program level data, which in some cases caused students to lose their interest subsidy prematurely. And there's finally untimely reporting of specific student information, sometimes months or even years late. And then schools are just consistently exceeding the 60-day requirement to certify enrollment data. The regulations for each finding are included on the slides and in the resource section at the end of the presentation. Untimely reporting of last dates of attendance cause your students to lose an important part of their grace period. It's the time during which they establish their relationships with loan servicers and prepare for repayment. Correcting this finding should be your top priority, and here are some solutions. If possible, establish an electronic enrollment reporting schedule. A good practice is to submit the roster file every 30 days so students and loan servicers can maximize the grace period. Implement a process to monitor and timely report enrollment status changes. Train staff on the reporting requirements and procedures. You could use the NSLDS Enrollment Reporting Guide to help you, because the person or persons responsible for submitting the NSLDS roster file must understand the financial consequences to the students if enrollment status is reported untimely or incorrectly. Create or strengthen your institutional policies and procedures. Document what needs to be done. And originate loans as early as possible so your students are added to the NSLDS database, and then they'll be added to your roster file. And finally, you can elect that students submitted for transfer student monitoring are automatically added to your enrollment roster. Number 2, repeat finding failure to take corrective action. This finding only occurs in compliance audits. And a repeat finding is one that has occurred consecutively in 2 or more years. Most of the repeat findings are part of the top 10 deficiencies. All deficient audits are submitted to Easy Audit with a corrective action plan. And that corrective action plan should address each audit finding, and it should include the planned corrective action for each finding, the person or persons responsible to carry out that corrective action, and an expected completion date to correct the deficiency. Or if the school disagrees with the audit finding, the corrective action plan should include a statement on why the school disagrees with the finding and why it does not warrant action. Repeat findings occur because the corrective action plan is ineffective or not implemented. Some schools are uploading the plan to Easy Audit and then they are forgetting about it. Other times, the school submits the same ineffective corrective action plan that it submitted in previous years. Repeat findings should be taken seriously because schools may be referred for a fine action or placed on heightened cash monitoring. Here are some solutions for avoiding repeat findings. When developing the corrective action plan, create simple, measurable solutions that address the root cause of the deficiency. Share the corrective action plan with everyone involved. And give specific staff the responsibility to monitor the plan. Periodically review the results of the plan. Is it working? Does it need tweaking? If it needs tweaking, it's okay to make changes to it. Create new policies and procedures to correct the deficiency and check that they are being followed, and make sure the staff are properly trained on those new procedures. Now, I would like to take a moment to talk about policies and procedures because they are essential to strengthening your internal controls, and they are a common solution to most audit and program review findings. These are internal policies and procedures, not the student consumer information policies. And many people think that policies and procedures are the same thing because we always say policies and procedures, but they're not the same. They are related, but they are different. A policy is a statement of intent, and a procedure is the series of steps that are followed to carry out the policy. Policies and procedures provide guidance and consistency to your Title IV processes. And there are 2 excellent resources for creating policies and procedures, and they are included in the resource section at the end of this presentation. So use them together to develop a comprehensive policies and procedures manual. Return of Title IV calculation errors is our next finding, and it is the number 3 compliance audit finding and the number 2 top program review finding. Schools with credit hour programs are using incorrect number of days in the term or payment period, which can be caused by calculating the number of days using incorrect term start or end dates, and including scheduled breaks of 5 or more days, or excluding the incorrect number of days in the scheduled break. Schools with clock hour programs are using actual clock hours instead of scheduled clock hours, or they are calculating scheduled hours incorrectly. Sometimes the withdrawal date used in the calculation conflicts with the student's official withdrawal date or last date of attendance in the school's records. And also, some schools are using the date of determination incorrectly as the withdrawal date. Schools who are required to take attendance are not always determining by 14 days after the student's last date of attendance if the student plans on withdrawing or returning to school. We also have incorrect aid used as could have been dispersed. So what's happening is aid that was never dispersed or aid that was dispersed after the student's last day of attendance is being placed in the dispersed column instead of could have been dispersed. Schools are failing to identify, offer, and disperse post-withdrawal disbursements, or they are making incorrect post-withdrawal disbursements to students. There are always mathematical and rounding errors that result in schools returning the incorrect amounts. And there are other errors too. There's gross amount of loans being used instead of the net amount in step 1. There are step 5 errors where institutional charges are incorrect or that step is being missed entirely. Some schools are using R2T4 worksheets with missing steps in them, and others are returning funds in the incorrect order. And then finally, schools have incorrect consumer information policies for R2T4. They are missing elements, and other schools are missing an official withdrawal policy. Here are some solutions to avoid R2T4 calculation errors. Establish a correct academic calendar if you are using an R2T4 calculator. Confirm that you have set it up correctly before you start processing R2T4s for that term. Remember to exclude scheduled breaks of 5 or more consecutive days, and then count all days in that break, including weekends. If you're a clock hours school, remember to multiply the number of clock hours that students are scheduled to attend each day by the number of days that elapsed in the payment period or period of enrollment until the student withdrew. You can create a scheduled clock hours chart by listing in one column the number of days and then in another column the cumulative hours as they add up each day, if that will help you calculate R2T4 easier. Verify that the student's withdrawal date and date of determination match the school's records before completing the calculation. And provide information, correct information to your third-party servicer if it is completing the calculations for your school. Develop or evaluate your R2T4 policies and procedures and list all the steps in your process. You could use our trainings to train your staff. We have R2T4 trainings on fsatraining.ed.gov. You could also have your staff complete R2T4 hand calculations so they understand the process. Emphasize the common calculation errors that may be happening at your school, and keep in mind that there are handy charts in Volume 5 of the Federal Student Aid Handbook at the end of Chapter 2. Set up a peer review process and have at least one other person check the calculations for accuracy. And finally, review your R2T4 consumer information. There's a sample R2T4 policy in the Federal Student Aid Handbook. Again, it's Volume 5, Chapter 2. And also confirm that you have a policy that explains how students may officially withdraw from your school. Number 4 is R2T4, or return of Title IV funds made late or not made. And this is the number 4 top audit finding. It is not a top 10 program review finding. There are 2 main deadlines that impact R2T4 calculations. The first one is that 45-day requirement from the date of determination that the student withdrew to return the funds back to the programs. The second deadline is a 30-day requirement for notifying a student or parent that he or she is eligible for a post-withdrawal disbursement, or notifying a student of a grant overpayment. And that 30-day deadline is also 30 days from the date of determination that the student withdrew. Causes for late or not made R2T4 findings include: there's no system in place to track the number of days remaining to return funds. An incorrect date of determination is used to keep track of those R2T4 deadlines. The schools are failing to complete R2T4 calculations for students who withdrew after that 60% point in time. Schools cannot identify unofficial withdrawals, and many times schools are issuing F grades to unofficially withdrawn students, and then they cannot distinguish who actually unofficially withdrew and who earned those F grades. And then finally, the student ledger shows that funds were returned timely, but the COD record says that they were not. Remember that you must complete an R2T4 calculation for all Title IV recipients who withdrew, because you need to determine if the student was eligible for a post-withdrawal disbursement. So here are some solutions. Coordinate the student withdrawal process with your registrar and student accounts offices. Work together, because you cannot process timely returns if you do not know that the student withdrew. Develop an R2T4 tracking system. Track and monitor the process. By any chance, do you have a financial aid management system that tracks the number of days for you? Or if you're a smaller school and have few withdrawals, you could use a calendar to write in those 30 and 45-day deadline dates. You just need to keep track of them. Review and revise your policies and procedures. Explain the process and your procedures. How are you meeting that 30-day and 45-day deadline? Include how the offices communicate withdrawals and the return of funds. A best practice to avoid this finding is to complete the calculation as soon as you know the student withdrew, and then return the funds immediately after completing the calculation. Develop a system to identify students who unofficially withdraw and make a policy and procedure about it. Explain how your school determines the withdrawal date for unofficially withdrawn students, and also explain how your school distinguishes truly failed courses from unofficial withdrawals so you can timely complete an R2T4 calculation. Provide staff training. Include all staff responsible in the withdrawal process and make them aware of these deadlines. And then finally, conduct periodic reviews of withdrawn students and determine, was the calculation completed within 13 days? Were students or parents notified of post-withdrawal disbursements within those 30 days? And then finally, were funds returned back within 45 days? All of these deadlines, again, from the date of determination that the student withdrew. Verification violations is our next finding, and it is the number 5 top compliance audit finding and the number 4 top program review finding. Common causes are inaccurate verification of selected applicants. We have untaxed income not being verified. Parents are included in the number in college. Step parents or the student's spouse's information not being included on the FAFSA. We have incorrect data updated from the tax transcript. Schools are failing to recalculate the EFC after they complete verification and they've made changes. We have schools collecting verification documentation that's incomplete or it's missing from the student's file. We are seeing improper tax documents being received and verification worksheets that are incomplete, sections are left blank, or they are missing signatures. Some schools are not following interim disbursement rules. They are making interim disbursements before resolving conflicting information, or they are paying on an invalid ISER. And then we see schools on HCM2, which is heightened cash monitoring 2, or reimbursement making interim disbursements when they should not be. We're seeing conflicting information is not being resolved, and it must be resolved when you complete verification. And also schools have missing verification policies. We're seeing no published verification policies for students and no institutional policies and procedures to explain the verification process. So some solutions for avoiding verification violations. Revise your verification procedures to address how you collect required documents for the different verification groups, how you check for missing information, resolve conflicting information, and follow through with ISER corrections. Make it a policy that you will verify students and receive corrected ISERs before dispersing aid. In other words, do not do interim disbursements if it's been a finding for you. Use a verification checklist if it will help you complete verification correctly. And you can include the verification group, the items to be verified, if there are differences that need correcting, and also a reminder to check for conflicting information. And you could put some common causes for conflicting information there. And speaking of conflicting information, remember, you must verify any information that you have reason to believe is incorrect, such as tax information, including tax filing status, conflicting household size or number in college, and conflicting marital status. Monitor the process of ISER corrections and verification status codes. Make sure the verification group is correct before you verify, and also check that that verification status code in the system is correct. Create a peer review system to check for accuracy and perform file reviews regularly. And finally, make sure that you have a verification policy for students and parents to see in your consumer information, and make sure the policy covers all required elements. Number 6 is qualified auditor's opinion cited in the audit, and it's a little obvious. It's only used for compliance audits. And the terminology is counterintuitive because an unqualified opinion by the auditor is a clean opinion, and that's good. Anything else is a modified opinion. And there are 3 types of modified opinions. There's qualified, adverse, and disclaimer of opinion. And these other opinions, the modified opinions, are expressed when there are high error rates, insignificant deficiencies, such as systemic issues. These are things that affect an entire process or group. And most causes for that modified auditor's opinion are included in these top 10 findings lists. Here's some solutions for avoiding a qualified auditor's opinion. If you get that finding, design a school-wide action plan if the modified opinion is not just about the financial aid office. Implement an effective and timely corrective action plan for all your audit findings. And then use measurable steps to address any serious deficiencies. Correct your policies and procedures. If you did not have policies and procedures for the issue, create them immediately. Train all appropriate staff, establish a peer review system, and then set up milestones for improvements because you want to see that error rate go down. You're going to have policies and procedures in place, and you're going to train staff, and then you're going to peer review. And every time you do a peer review, you want to see your error rate go down. That means your new system is working. Number 7, student credit balance deficiencies. It is the number 7 top compliance audit and program review finding. The causes for this finding include lack of internal controls. There's an inability to properly determine Title IV credit balances. Or there was no documentation to prove that the credit balances were released to students. Some schools failed to maintain a credit balance subsidiary ledger or maintain cash at least equal to the amount of funds they were holding for students and parents. Reviewers also see credit balances not being released to students within 14 days. Schools on heightened cash monitoring are incorrectly holding credit balances. Some schools are using credit balances for future charges or overtime charges. And schools that charge for the entire program up front are releasing credit balances after the entire program was paid for, instead of prorating charges for each payment period and assessing the credit balances for each payment period. And post-dated checks are being given to students. Now, please keep in mind that if reviewers cannot find documentation to prove that the student was given a check on an exact date, they will begin counting the number of days from the date the Title IV credit balance was created to the date that the check was negotiated. Title IV credit balances are not being released by the end of the loan period or award year for those being held with authorizations. And unclaimed credit balances were not being returned to the department by 240 days. And finally, we see a lot of incorrect Title IV credit balance authorizations. The authorizations are commonly missing the statement that the student or parent can cancel or modify the authorization at any time and the process for doing so. And some schools, not many, but some are using misleading titles, such as authorization for Title IV funds or financial aid acceptance, which it does not meet requirements. So here's some solutions to avoid this finding for credit balances. Increase your internal controls to identify credit balances and ensure timely return of funds. Develop your policies and procedures so you can make sure that students that do not have an authorization are receiving their funds within 14 days. And then those that do have authorizations have them by the end of the loan period or the award year. Do not use credit balances to pay for future charges or overtime charges. And remember that schools on heightened cash monitoring or reimbursement must release Title IV credit balances to students within 14 calendar days, and they are not allowed to obtain authorizations to hold those credit balances. Train all staff responsible for releasing credit balance refunds because everyone must understand the importance of the deadlines. And then conduct periodic self-audits of credit balance disbursements. Check, are the funds being released to students within 14 calendar days? Are all Title IV credit balances held with authorizations being released to the students by the end of the loan period or the end of the award year? And how about any unclaimed funds? Are they being returned to the department no later than 240 days? And then finally, confirm that your credit balance authorization is in compliance with Title IV requirements. We have a sample authorization in the Federal Student Aid Handbook. It's in Volume 4, Chapter 2. You're free to use it. We make it easy for you. Our next finding is entrance and exit loan counseling deficiencies. It is the number 8 top audit finding, but the number 3 top program review finding. I only found one instance where the reviewers found no evidence that entrance counseling was completed prior to dispersing loan funds. All the other findings were caused by exit counseling deficiencies. And schools do not have a process in place to provide exit counseling to students who dropped to less than half-time status, graduated, or withdrew. Some schools had no documentation to prove that they sent the exit counseling materials to the students. Other schools were sending email notifications notifying the borrowers that they had to complete online counseling, but they did not attach the counseling materials. And then they didn't follow up. The borrowers never completed the online exit counseling, and the schools never sent the materials to the students. So here are some solutions to avoid this finding. First, improve your communications among the registrar, business or student accounts office, and the financial aid offices, because just like the late R2T4 finding, you need to know who is dropped below less than half-time status, although that's not R2T4, but for this, you need to know that. You need to know who graduated, or withdrew in order for you to send the exit counseling information. You could post the studentaid.gov exit counseling link and loan counseling requirements on your financial aid webpage. You can make exit counseling a requirement for graduation. That's fine. Many schools do it. And then you need to develop a system to provide exit counseling materials to all less than half-time students and unattending students. So here are some things to keep in mind. You must mail or email exit counseling materials to students within 30 days of learning that the borrower dropped below less than half-time or left school or failed to complete an exit counseling session. You may mail or email the exit counseling materials to the student. And in lieu of mailing or emailing the actual materials, you could even send a direct link to the exit counseling materials, but it must be a direct link. It cannot be a link to a general web page where the student would have to search around for the materials or click on some more links to find it. If you are mailing the materials, you are not required to send them by certified mail with a return receipt requested, but you must document in the student file that the materials were sent. If emailing the student's email address must not be associated with the school that is sending the counseling materials. And I want you to think of something, because although you've satisfied this requirement by mailing or emailing the materials or the links, whichever, remember that most defaulted borrowers do not complete their education. And a borrower who defaults in his or her cohort default period will affect your school's cohort default rate. So it is always in your best interest to be as proactive as possible when you have students who withdrew from your school. Number 9, G5 expenditures untimely or incorrectly reported. This finding is used by auditors. Program reviewers use a different finding, which we'll see in a little while, called account records inadequate or not reconciled for the same deficiencies. So the auditors cited 3 causes over and over. I saw nothing else but these 3 causes. Schools are not submitting Pell, Teach, or direct loan records in COD no later than 15 days after making a disbursement or making an adjustment to a student's disbursement. Disbursement dates in COD are not matching the student's ledger. And then disbursement amounts in COD are not matching the student's ledger. Now, keep in mind that the COD loan disbursement dates are being reported to loan servicers, and interest begins to accrue on loan funds based on that date. I want to point something out in the regulations because sections 685-301 and 690-83 refer to a federal register. And this is the award year deadline dates Federal Register that specifies that 15-day requirement to submit disbursements or adjustments to COD. And the 2021 award year Federal Register was published on July 14th, 2020, and you can find it in IFAP under Federal Registers. So some solutions for this G5 expenditures finding. Develop and enhance your policies and procedures for disbursement rules. Have rules in place to implement solutions, such as make sure you're submitting disbursement records in COD no later than 15 days after dispersing aid or making an adjustment. Updating the estimated disbursement dates in COD to the actual disbursement dates if you are putting estimated dates in COD as placeholders. And then establishing a regular reconciliation process to compare the dates and the amounts in COD to the dates and the amounts on the student's ledger and resolve any discrepancies. Now, the regulations say that the disbursement date is when aid gets posted to the student's ledger. And then finally, If you are using a third-party servicer, make sure you are sending them your correct disbursement dates so they could update the information as well. All right, number 10 for audit, Pell Grant overpayment and underpayment. It is not a top 10 program review finding. There are several ways that a Pell Grant overpayment and underpayment can occur. The incorrect formula is being used. Most often, Formula 1 is being used instead of Pell Formulas 2, 3, and 4. There are inaccurate calculations. Either the Pell Award is not being prorated, or it is being incorrectly prorated for the payment period, or it's not being prorated for the remaining portion of an program less than an academic year. And then we have Pell Awards not matching expected family contributions, or EFCs. Some schools have used a prorated EFC, not the 9-month EFC, to determine the Pell Award. And others are using the incorrect number of hours or weeks in the calculation for non-term programs. And then errors occur when a student changes enrollment status. An overaward occurs when a student was full-time, let's say for fall term, and then changed to a different enrollment status for the next term, and the school did not check the enrollment status prior to dispersing full-time Pell. And then an underpayment occurred when the opposite happened, where the student was less than full-time for, let's say, fall term, and then became full-time in the next term. The school did not check enrollment status and dispersed a lower Pell amount. Here are some solutions for awarding correct Pell disbursements. Establish policies and procedures to strengthen your awarding process. Ask and answer questions to help develop stronger procedures, such as which Pell formula is being applied to which educational program. Must Pell be prorated for any educational programs? If yes, include an example in your procedures. How do you verify enrollment status before disbursement? And what is your policy if the student changes enrollment after the drop-add period? You should also document how the Pell Award was determined, either on a packaging worksheet or in your financial aid management system. You can include all different things: the formula used, the scheduled award, the student's enrollment status, or if you're non-term, the number of credit or clock hours and the number of weeks, since you have to compare the two, and whether the Pell was prorated. If you have a transfer student, you should document the file if the student's record includes transfer clock or credit hours that result in a reduced Pell Award. Verify enrollment status before dispersing aid and adjust the award if necessary. Conduct staff training at least annually, especially if you have a big packaging push once a year, or you use proration often, or you have different educational programs using different Pell Grant formulas. And then finally, conduct file reviews regularly, especially of less than full-time students. There are 5 remaining top 10 program review findings that were not covered under the top 10 audit findings. We reviewed findings 1 through 4, and we will cover number 5, consumer information requirements not met. And then we reviewed credit balance deficiencies, but we'll continue with satisfactory academic progress, lack of administrative capability, account records inadequate or not reconciled, and crime awareness requirements not met. I reviewed program review reports whose final determinations were issued in fiscal year 19 to determine the causes of each finding. Number 5, consumer information requirements not met. This finding covers all regulatory requirements that are not under campus security or Part 86, which is the drug and alcohol abuse prevention regulations. This finding occurs because the required elements are incomplete or incorrect, or they are missing from a school's disclosures. Here are the most common incomplete or missing elements. Under financial assistance information, The annual notice of availability of information is the number one missing or incomplete element for this consumer information finding. We also have how to apply for financial assistance or how to contact the financial aid office and terms and conditions of Title IV loans. Under institutional information, we have disability services and facilities, or how Pell Grant students can obtain or purchase books and supplies. Under disclosures of institutional outcomes, we see percentage of student body receiving Pell Grants and completion, graduation, and transfer out rates. The FERPA annual notice is not being sent, and the FERPA policy is incomplete. The NSLDS information disclosure is typically missing, and other information includes equity in athletics, voter registration, and copyright violations. This finding includes other issues as well, such as incorrect or inconsistent information across publications and web pages. Disclosures are not being updated to reflect information that changes, and it is difficult in many cases to locate consumer information on the school's web pages. So here's some solutions. Consumer information is not solely a financial aid office responsibility. Divide the requirements by the responsible office or department and assign staff to monitor and update the information. Make your consumer information easy to find, not hidden on your webpage. And to the extent possible, keep your consumer information in one place, update it annually, and avoid multiple handouts that are given out from different offices at different times. And use our excellent resources. If you are new to developing consumer information, I highly recommend starting with Volume 2, Chapters 6 and 7 of the Federal Student Aid Handbook for an overview of the consumer information requirements, and then use the Consumer Information Disclosures at a Glance found in FSA assessments, along with Appendix F of the Federal Student Aid Handbook called Institutional Reporting and Disclosure Requirements, and use those documents together to develop your school's consumer information. And there's a hidden secret. The department has a FERPA model notification that you could use. It's a FERPA disclosure that has all the requirements, and the information is in the resource section of this presentation. Number 6, satisfactory academic progress policy not adequately developed or monitored. The causes for this finding include an inadequate policy. There are one or more missing required elements in the school's satisfactory academic progress policy, such as treatment of course repetitions or transfer credits from other institutions, and conditions for regaining eligibility. There are incorrect policy elements. Appeals, probations, and academic plans are not clearly explained, or they are incorrectly used. Schools are allowing lower than a C average or equivalent by the end of the second year. And many times we see SAP standards for Title IV are lower than the school's academic policies. Schools are failing to apply their policy consistently or adequately. They're processing appeals that do not meet requirements, and they are failing to follow their own policies. There are incorrect assessments. They are not being completed at the end of a Title IV payment period. Now, you can check satisfactory academic progress whenever you want, but for Title IV aid, you must check it at the end of a Title IV payment period. And courses that are dropped after the dropped add period must be included in attempted credits when calculating PACE. That was missing as well. And there is insufficient or missing documentation to support that the school checked satisfactory academic progress. They were unable to produce documentation. And finally, Title IV aid is being dispersed to students who are ineligible because they did not meet the school's satisfactory academic progress standards. Here are a few solutions to help prevent a satisfactory academic progress finding. Review and revise your policy to include all required elements. Use our resources. We have an SAP module, an FSA assessments, and also in the Federal Student Aid Handbook, Volume 1, Chapter 1, and Volume 2, Chapter 3 has a lot of information. And then publish your revised policy in your consumer information. Now, keep in mind, you can have different policies for different programs, but you have to apply one policy to all students in the same program. Make sure you are retaining documentation in the student files, either electronically or paper, doesn't matter, but you need to prove that SAP was checked when you said it was checked, that the student either made SAP, or if they did not make SAP, what the outcome was. Strengthen your internal policies and procedures to consistently apply your standards, and then train staff on these procedures, including your appeals committee. And then finally, conduct periodic random file reviews to determine if your policy was applied consistently for all students in an educational program. Number 8, lack of administrative capability. This finding is equivalent to qualified auditor's opinion cited in the audit, and it appears in program review reports because there are serious and systemic violations, including those on the top 10 lists, and lack of internal controls or ineligible program and location, and misrepresentation of educational programs. Schools are having issues with either incapable staff or an inadequate number of staff, and they are not providing training to staff, or they are failing to provide adequate financial aid counseling. Schools are showing evidence of significant problems that affect Title IV administration. For example, they're not reporting institutional eligibility changes or changes in ownership to the department, or they're not coordinating and sharing information among offices as required in standards of administrative capability. And schools are failing to establish written policies and procedures or maintaining adequate records that are required for Title IV administration. And they are failing to provide accurate and timely reports to the department. And then we have schools otherwise appear to lack the ability to competently administer the Title IV programs. They fail to follow their own institutional policies and procedures, or there are security breaches, or the school has high cohort default rates. Now, you've heard me mention many of these solutions already. I just want to remind you to get to the root of each compliance finding. Strengthen your internal controls and document them in your policies and procedures. Provide recurring staff training, especially on the top 10 findings. And then you could read Volume 2, Chapter 7 of the Federal Student Aid Handbook for information on protecting student information. And then use the default prevention resource page on IFAP to help lower your school's cohort default rate. Number 9, account records inadequate or not reconciled. It is related to the G5 expenditures finding, and the program reviewers use this finding for inaccurate disbursement records, including the 3 deficiencies we discussed under the G5 finding, and also the schools are having inaccurate or incomplete student account statements. The Title IV disbursements are being listed as just payment, or they're missing, or the statements do not have a running balance. We have schools on heightened cash monitoring that are failing to comply with their disbursement requirements. Schools have inaccurate fiscal records and accounting for funds. They are failing to reconcile Title IV accounts monthly. They are failing to properly identify Title IV bank accounts, or they have inadequate audit trails where the transactions cannot be followed from the general ledger to the subsidiary ledger. And then finally, schools have excess cash, which means that they drew down more Title IV funds than they needed to disperse to students. So for solutions, implement the solutions that we discussed under the G5 expenditures finding. And if your school is on heightened cash monitoring, 1, remember to disperse the Title IV aid, issue credit balances, and then draw down the funds in G5. Maintain accurate and complete fiscal records. Make monthly reconciliation of your Title IV accounts part of your internal controls monitoring process, and have a policy and procedures about it. Verify that your school's Title IV bank accounts have the word federal in their title. This is probably the easiest to fix, easiest thing in this entire presentation. Keep clear accounting records to document your Title IV activities. Can an auditor or program reviewer follow the audit trail from drawdown to disbursement, then posting to general and subsidiary ledgers? Take a good look at your student account statements. Are the charges clearly laid out? Are Title IV disbursements clearly identified? Is there a running balance? Can you tell when a Title IV credit balance is being created, or can a student or parent tell by that account when they owe you money? And then draw down funds for immediate use only. You don't have to draw down funds first and then disperse. You can always choose to disperse the Title IV aid first and then draw down the funds from G5. That might save you from an excess cash finding. And then our final finding, number 10, crime awareness requirements not met. The deficiencies that cause this finding are many, but the number one issue is that schools are not meeting the annual security report requirements. Schools are failing to prepare and publish a single, accurate, and comprehensive report, or they're not distributing that report to current students and employees, and they're not making it available to prospective students and employees, or the report is missing required elements. And then we have campus security policies are not adequately developed. There were multiple violations for that finding. And then there are crime statistic issues where schools are failing to develop a system to track and log all required categories of crimes for all campus locations. And there are crime statistics discrepancies between the school's reports and data submitted to the department. This is a serious finding because students need to make an informed decision about their health and safety. So let's look at our final solutions. Campus security typically is not a financial aid office responsibility, so pass this information along to who is responsible. Your school should create a team to manage the entire annual security report process. The report should be distributed by October 1st, and it should develop policies and procedures to make sure that crimes are being reported in all categories. And establish a peer review process to check campus security disclosures for accuracy. Remember to post the links on your school's webpage and make those links easy to find. And then finally, again, use our excellent resources. And here's a note, the Handbook for Campus Safety and Security is now an appendix of the Federal Student Aid Handbook. But we also have that Consumer Information Disclosures at a Glance and Appendix F of the Federal Student Aid Handbook, Institutional Reporting and Disclosure Requirements. Here's the contact information for all school participation divisions, including the states managed by each office, general email, managers, and their direct phone numbers. Thank you for your attention. I would appreciate your feedback and comments and would be happy to answer any questions that you have about the information discussed in this presentation. What follows are 2 sets of resources to help you stay in compliance. The first set is resources by top 10 findings, which includes the regulatory citations and where to find specific information so you can strengthen your internal controls. And the second set is called Top 10 Resources for Compliance Solutions, which includes references and trainings to help you administer the Title IV programs in accordance with laws and regulations. This concludes my presentation of the top 10 findings. I wish you administrative capability, strong internal controls, and easy audits.